There's this huge thing around what wealthy people do in terms of their mindset versus what most people do.
A lot of people think that when they get into stuff like real estate, that they have to go out and do everything themselves, and that this kind of passive income.
There's really no such thing as passive income because no one cares about your money the way you do. Unless you learn how to make money while you sleep, you'll work until you die. Business is all about who do you like working with.
And get into the circle and rooms with potential mentors and people ahead of you.
Almost every successful person I know has imposter syndrome at some level, which is just like, who am I to be successful and show up in this room full of amazing people? So I think it's just being willing to put ourselves in a place where we feel a little bit uncomfortable. It's just amazing what happens when you allow yourself to see yourself, not just who you are, but the 10x version of yourself.
Welcome back to the Hybrid Real Estate Professional Podcast, the show where we dive into how professionals are building wealth through real estate and entrepreneurship without blowing up their lives in the process. I'm your host, Aaron Amin, and today's guest is Bronson Hill, founder of Bronson Equity and host of the Mailbox Money Show. He's one of the leading voices on wealth mindset and passive investing. He's also a general partner in over 2,500 multifamily units worth more than $250 million, and he's personally raised over $50 million for private equity and real estate deals. He's the author of the best-selling book, Fire Yourself, and has a new book coming soon called Rich Brain, based on interviews with over 2,500 millionaires. If you're trying to understand how the wealthy think, how they structure their investments, and how to get started in real estate without becoming a landlord, this conversation will hit home. Well, let's get into it. Welcome to the show, Bronson. Good to have you.
Aaron, happy to be here, man. Excited to chat with you.
You know, I'm very interested in learning what you picked up from 2,500 different conversations with millionaires, because I've got to imagine there's some common threads there. So maybe let's start with the current and talk about some of the inspiration behind your upcoming release.
Yeah. So my first book, Fire Yourself, was about passive income, how to replace your working income with passive income in 3 years or less. So in the process of raising $50 million, which is hard to believe. It's just, one foot in front of the other. It ends up growing over time and being able to help a lot of people, which is great. And, but there's this huge thing around what wealthy people do in terms of their mindset versus what most people do. And again, a lot of people think that having written goals or doing affirmations or really spending time with mindset or personal development work is really weird. And it is weird because most people don't do it. But the type of weird people that do it are the wealthiest people, right? So if people that are wealthy do it, it doesn't matter if it's weird or not. It's important to look into. So I think that one of the biggest concepts I found in these interviews is something I call wealth worthiness. So what an example of this is, like, a lot of times people will have an idea of what they don't say it, but they'll have this subconscious limit that they feel like, okay, I'm worthy of $100,000 or I'm worthy of $1 million. So somebody makes $100,000 a year will typically make $100,000 a year, and maybe they'll stay about there, or they'll take incremental jumps up. Okay, I go from 100 to 110,000 to 125, and they kind of make little jumps up over the year. I had a jump from I was making about $200,000 in my medical sales job to basically about 20x my net worth, 25x my net worth over 4 years to multiple seven figures, about $4 million. And it happened through just seeing myself a bit differently. And now we can get into that. I'm happy to share more how that applies to life, but there's a lot around that topic that I find very interesting.
Yeah, absolutely. I agreed. We'll circle back to that, but maybe we rewind a bit and talk about how you kind of got into this space in the first place. So you mentioned just a second ago, medical sales. Was that a previous, like, a W-2 chapter?
Yeah. So I worked for 10 years. I did medical device sales, and I started doing physical therapy devices toward the end of my career. I was working in heart surgical sales. So I was basically going in, wearing scrubs, going into surgery and advising physicians on how to use their heart surgical devices. Now, intellectually very interesting. It was cutting edge stuff. It's really amazing, all the things that are happening in the heart surgical space. But I think one of the reasons I wanted to shift is I wanted financial freedom, but for me, it was really about time freedom. So most people will say, hey, I want financial freedom. And it's like, well, what do you really want? I mean, that's just more money. But for me, I wanted more time. So you can always make more money. You can't make more time. So here I was making about $200,000 a year, was working 30-ish hours a week. I worked with a couple of physicians though, and they made over $2 million a year each. And they were working like 60 to 80 hours a week, every week. And I saw them and I didn't really think that they had financial freedom, right? They had money coming in, but they didn't have time to be able to enjoy it. And if you live in the US, like, we just take fewer days off for vacation than most of the rest of the world. And so I think in some ways we have it quite a bit wrong. So I started to realize, like, are there ways that I can grow my wealth without taking up more of my time? For me, I didn't have really a lot of money at the time. So I started to really learn. I found a mentor and basically said, why don't you start raising capital for real estate? And I thought, well, raising capital, how do you do that? And it's like, I didn't realize with my sales background that could actually be a good fit. Started a local meetup in Los Angeles or Pasadena, California here. Found my first investor, raised $100,000 for one deal. And then through some partnerships and a lot of, I can get into that story, kind of what exactly happened, but just been able to help people and start doing bigger deals, more partners, more investors, creating content, going on interviews and just telling the story of, hey, what does it look like to actually be someone that can help people grow their wealth and actually grow my wealth that way as well.
I love it. Yeah, the capital raising is kind of an enabler role, if you will, right? You're connecting people who have capital that want to invest and get returns. Maybe they don't want to have an active role themselves, but they want exposure to different types of opportunities in which you can get in the public markets. And you're facilitating that and putting them, kind of acting as a bridge between them and the operators or sponsors, which means I'm sure that you built a big Rolodex on both sides. So you got to know a lot of great operators and then also build a Rolodex of investors, which is kind of a unique skill that I don't think everyone realizes that that's even an option. A lot of people think that when they get into stuff like real estate, that they have to go out and do everything themselves and that this kind of passive income. I'm actually very hesitant to use the word passive when I talk about anything other than investing as an LP, because I think it's misleading. The majority of my episodes and the majority of my real estate background was in rental properties. And so I shy away from the P word, but in this context, I think it does apply. But can you talk about so you mentioned you worked with a mentor to get into this space. Like, how did you find that person and what were some of the initial steps that you took?
Yeah. So there's a saying, when the student is ready, the teacher appears. That's how it was for me. I had been interested. I had kind of like you had single family, and I agree with what you said about passive income. There's honestly really no such thing as passive income because no one cares about your money the way you do. But there are investments that are more passive. So that's where like investing, where you're an LP. That's what we have LPs invest with us. So the work is on the front end where you vet a deal, you vet a team, things like that. But to me, similar to you, I basically did some single family. I had 4 single family houses. I told, this was a relative of mine. I just hadn't seen them in years and they're a little more a distant relative. And I had shared, hey, this is my plan. I want to get 30 of these houses and I want to scale them up. And then they just said, well, that sounds like a lot of work. Why don't you do apartments? And I said, well, I don't have the money. He said, well, you can raise the money. And so kind of said, read this book, go to this conference, listen to this podcast. He just gave me some different things to do. And I knew he was legit because he wasn't trying to sell me anything, because he was a relative. So I was like, he's just trying to help me out. So I realized, like, for me these days, especially too, single family and even a lot of real estate in general it's challenging right now because cash flow that was there a few years ago is not there now because of higher costs, interest rates, lots of different reasons. And again, when I was doing single family, it was just me, right? I was out there. I had a real estate agent help me buy stuff, and then I had a guy help me fix stuff, and then we had a property manager. But it was, for the most part, I was kind of even though I wasn't managing the stuff, we had a property manager. Like, I was still getting calls every single week. Hey, what do we do here? The tenant's not paying. The toilet's not working. The city said they didn't trim the grass in the yard. I mean, there was just problems coming up. And so, I think what I realized about going with bigger scale, so whether you're doing it from a capital raising perspective or you're doing it from an investor standpoint, when you scale, it's just way more efficient. If you have 100 houses and those are single family houses, to manage that, it's just a bear because you got to pay way more for the management. And then for the managers, let's say you got a problem, the manager's got to go take a look, then they've got to call the maintenance guy. The maintenance guy's going to run over there, go see what it is, go to the Home Depot, get the part, come back. You're paying them sometimes $40, $50 an hour versus when you have 100 units in one place, the property manager's there every day. Usually you have 1 or 2 full-time maintenance people that are there all the time. It's typically only a certain number, like certain colors of paint. You get the same appliances, you get the same plumbing. It's one roof typically. So like, it's just way, way more efficient when you have a larger deal. And then it allows people actually to be much more passive, right? So it's a different way to think about it. But again, if you want to, as Warren Buffett, this is how this all started for me, Aaron, was Warren Buffett's quote, unless you learn how to make money while you sleep, you'll work until you die. And so Warren, I think, is just retiring at age 94. So that's good for him. So, but the idea is right? Just being able to not have to be the one doing the work.
100%. Yeah, there's economies of scale. Like as you were describing that, I'm kind of rolling back in my head. We bought 8 rental properties across 3 states. They're all
Wow.
different houses in different areas. We have 3 different teams. Like you said, there's basically no built-in efficiencies. We don't have the same color of paint. We don't have the same appliances. So it really is like 8 different software programs
Yeah.
running in the back of your head, even though we
Yeah.
mostly at this point have property managers. For a while, we were self-managing all those. I view it
Yeah.
as great foundational knowledge and skills to be able to own and operate single-family rentals. But you're right that it does kind of give you the perspective of, man, wouldn't it be nice if there were a few more efficiencies, which is something you definitely do get with multifamily. And
Yeah.
are most of the deals that you raise money for, are they syndications where the investors truly are not only passive in reality, but like by law, they cannot participate actively in the operations?
Yeah, exactly. Yeah. And just to, for your example as well. And again, people do it different ways. And I think single families are great. It takes a lot longer. I mean, you can, and you're growing really equity. A lot of times you're saying, I'm going to grow my equity over time. And I call it and I talk about this in Fire Yourself, my book, about how passive your investment is. So if you can't 10x the amount of like that you currently have, so if you have 8, if you couldn't very quickly go to 80 without it being another job, right? Then people are like, oh my gosh, my eyes are already bulge out of my head. It's too much. Then it's not truly passive. Versus as an LP, the work is on the front end, right? We're vetting the team, we're vetting the deal. Does this fit my goals? Is this the right team? Is this the right project? Does it get what I want? And then people invest, and then they're fully passive. Once you invest, you send the funds, you're getting updates, you can ask questions, things like that, but you're not the one who's following up with the manager in the work in the deal as well. So yeah, they call it limited partner, just limited not in terms of ownership, but limited in terms as far as terms of work or control versus the general partners that are actually operating it. And really the general partners are on the hook that if something goes wrong, especially if there's some material misrepresentation or mismanagement, then there's some liability there for the general managers as well, right? So I think that as a limited partner, I mean, I'm a limited partner in a lot of different, number of different deals. I also invest in the deals that we do as a general partner. I invest as a limited partner as well. And so, but I approach things very much as a limited partner of like, what does this deal look like? The group, the operator, and then as a limited partner, you're not the one who's taking the calls. You just simply are getting information and trying to follow what's happening.
So I imagine you spend a lot of time kind of educating limited partners on what to look for. So they come to you, they work with you, you probably have a pipeline of deals and operators that you know and that you've worked with. But when you're meeting with someone who's considering investing for the very first time in a passive deal, like what you're talking about, what are some of the things that you share with them to look out for?
Well, I think there's a few things. One, I think before you ask about a specific deal, it's really to figure out what your goals are. A lot of people will say, I'll ask this question often, Aaron, I'll say, what's more important to you, cash flow or appreciation? And having, I've had thousands of these calls now, a lot of people are like, oh, a little bit of both or a little bit of this or that, and they don't really know. And I think for most people, it's actually a lot of cash flow. Cash flow is what allows you to replace income. It's what allows you to fire yourself, even if you're not ready to leave your job, just knowing that you can. Let's say you make, for me, I didn't have to replace my income. My income was, $200K a year, but if I made about $5 or $6K a month, that was enough for me, right? That was my rat race number that covered all my living expenses. I lived simply, I traveled, but I didn't need a lot, right? I needed a certain amount to cover that. So for people to figure out what their goals are, a lot of people that are making a lot of money, they'll pay a lot in taxes, particularly if you're a professional. You're paying sometimes 30, 40, 50+% in taxes. So those, there's tax strategies, there's investments like oil and gas that can help. So, but typically how these deals come to us, Aaron, is we get on people's deal lists, they send them to us, and it comes, the deal comes first. But really, whenever you get a deal sent to you, you need to stop and go back and kind of like, it's like a funnel. So the top of the funnel is like, well, hold on, like, does this meet my goals? Like, what does this look like? And then I always start with, there's kind of 3 parts to any deal, right? You have the market that it's in, you've got the operator, and you've got the deal, right? But the deal comes first. But before you analyze the deal, look at the market. Is the market multifamily in Houston, Texas? So, okay, is that market shrinking or growing? How many units are being added? What's rent doing? Is this an area that we're seeing growth and development? If rents are projected to go up, if there's growth in jobs, if there's income growth, those are very positive things. And if there's a shortage of housing already, then that's great, right? If you see all these units coming online, there's high vacancies, but maybe not, right? So the market, and this exists in businesses. How many car washes in a certain area? How many businesses? We're buying private businesses. So if we're buying a business of a certain type, well, what does that market specifically look like? The second thing, once you get through that, is who is the operator? Who's the person who's actually doing this? Do their values align with you? Ask questions around, I used to think we all wanted the same thing, but then I realized some people want to raise money from investors. and they never want to hear from them again, right? That's not a good person to invest with. If you're an investor, you want to be able to reach out and find a person. So what are their values? What's their experience? Is this deal similar to other deals they've done? Is this a self-storage deal? And these guys have done 2,000 multifamily units. Well, that's a different type of deal. What makes you think they're going to be successful in this new asset class, right? So you've got to ask those questions and see, are they a fit from their character, their values, their track record, and what the deal actually is? And does the deal itself help you meet your specific goals? Does it provide cash flow? Does it provide appreciation, tax benefits? What are the things it provides? So I think those are kind of the three-step process I find I provide in my books, just to help people to try to figure out, is this a good deal for me?
Yeah, that's really smart. And that's something too that I come across when I work with new investors in a totally different context. Usually it's teaching them to start their rental portfolio, but similar conversation where they start asking about the metrics and quantifying things before they've even told me what their end goal is. Are you trying to retire earlier? Are you trying to replace your spouse's income? Are you trying to just build as much wealth on paper as you possibly can over the next 10 years? They're completely different paths, and you're going to target a different type of property and probably a different market depending on the answer to that. So I love that. And then there's also the multi-dimensional thing that you're talking about, where you have the jockey and you have the horse, right? And sometimes you want both of them to be good, but a bad operator can screw up a good deal, and vice versa. Even the best operator in the world can't put lipstick on a pig if the deal doesn't have any merit to it. So that's great. So then on the first book, Fire Yourself, what's the underlying framework? Is the idea about using passive income to replace your W-2 income, or what's that all about?
Yeah. So Fire Yourself, really, it's about having the freedom. A lot of people are like, well, I love my job, or I have my business, or whatever. And I think, well, what happens if, God forbid, something happens to you, or become disabled, or your family member becomes, or you have a child that needs something happens, or you just decide you don't want to do it anymore. So a lot of times we don't realize how dependent we are on a job, on a business, on just having to go to work. And the problem is, even if you have, money, even if you've got $1 million, $2 million, $5 million in net worth, how are you going to generate cash flow, or how are you going to live once you retire? Stocks don't provide it. There's too much volatility. I can get into it. There's a whole chapter. I was a former registered investment advisor, and just all the hidden fees. It typically, they say it's 1.2%, but after hidden fees, it brings it about 3.2% per mutual fund, or a lot of ETFs, mostly mutual funds. And then if you have a money person, it's about another 2% fees on top of that. So that's 5.5% just in fees. And the average returns are only around 6 to 9% per year, depending on years you look. And there's some valid volatility there as well. So I think that for most people, it is really important to try to make a plan to, as Warren Buffett would say, make money while you sleep. And so if you don't know how to do it, it's okay. And I remember saying, I'm not quite sure how I'm going to leave my job, but I want to leave my job in 3 years. So I set a goal, and I just started learning as much as I can. And a big way to learn is to read books, listen to great podcasts like this, go to conferences, go to local meetups. If you're in a larger mid-sized market, search online for real estate meetup in Houston or in LA or wherever market you're in. There's lots of real estate meetups. And then go to a conference. There's one of the conferences I'm going to this summer. It's called the Limitless Expo in Dallas. A friend of mine, Ken McElroy, did the forward to my book. He hosts it, and it's awesome. So I think getting around people that are doing it, it kind of makes something that seems a little weird. Because honestly, if you haven't heard of syndication, if you haven't invested passively, it just kind of sounds a little weird, right? It's like, why would I ever give money to somebody I've never met? I don't know. That's weird. But then you meet people that have been doing it for 20 years and they've got success. But that relationship is really valuable too, because then they'll say, hey, I've invested with these guys. It's gone great. And hey, watch out for these guys because, I didn't have good performance over here. So sharing that information is really valuable. So I think the networking piece is really important. And I think the education side of just continuing to learn, introduce yourself to new ideas, new books, new podcasts. There's actually a quote that says, you'll be the same person 5 years from now, except for the books you read and the people that you meet, right? So what is that? That's the education and the networking. So just who you're going to meet, the partners, the opportunities, as well as just the learning, the books you're reading, the things you're listening to. They're super, super important when it comes to growing as an investor.
Yeah, no, I can appreciate that perspective. I should have mentioned at the top of the interview, I'm definitely a personal development junkie. I'm a big reader. I'm a member of several different groups, and I've been coached, and I also offer coaching. And so I really believe in the power of mindset. And that's one of the reasons I love both books, the one you're writing currently and then the one that you put out, that they focus so much on mindset and kind of making yourself better and making yourself more valuable and being interested and curious and indulging that instead of just diving exclusively into numbers and spreadsheets. There's a personal element to it as well for yourself, and then also how you approach different relationships. And with that, I'm curious if you have a kind of any advice for people who are not particularly social, putting themselves out in these environments, like you said, going to a conference for the first time and just
Yeah.
trying to make good use out of that investment of time and money when it's not their natural inclination.
Yeah, I honestly, I'm more extroverted than introverted, and I still feel awkward at conferences. So I just think most people feel awkward. Like it's just an awkward thing. But you realize people go to conferences, they're looking to meet other people. That's why people go to conferences. They want to connect. And especially real estate or other sorts of things, it's all about collaborating. A lot of times we think that if I do a deal, then there's less, or if somebody else does a deal, there's less for me and there's competition, but it really is collaboration. Like you and I, Aaron, we might do a deal together, right? We hear about something. It's amazing how there's a lot of collaboration that takes place within investing, within real estate, within other assets. And so, I would say for most people, what a lot of people do wrong about networking is that they will go with their agenda and they'll say, "Oh, hey, I've got this," or "Hey, here's my deal," or they won't actually connect. But I really think if you show up and you're intentional, like if I saw you at a conference, say, "Hey, Aaron, it's really great to meet you. I've listened to your podcast, or I've heard you. Well, tell me what you do." And then I listen, and then I say, well, and then as Aaron's talking, I would basically be listening for what is something I can do to help Aaron? What's something I can do to help you? Is there a connection that's here that maybe I met somebody at this conference? It's like, he's like, "I'm looking for this kind of deal." I was like, "Oh my gosh, you got to meet John over there." And so I go, hold on. And then I go introduce him to John. Or I think of a book that's like, I was exactly there. And this book totally helped me with exactly what you're talking about, right? So what happens is great networking is you're providing value to someone else. And then if I make a great connection, all of a sudden you talk to John and you guys are hitting off, you're going to do a deal together. Well, then that's huge, right? Because it's almost like you're a matchmaker in a way, not in a romantic sense, but like in the sense of like you're putting deals together and you get to be known as somebody who's doing that. So I love doing that. So we have our mastermind that's called the Wealth Forum. It's for high net worth investors. We do live events. And so people pay, it's typically 2 to 10 million net worth, sometimes up to 40, 50 million. And they'll just be in the room and share information, share ideas. We'll bring in speakers. And it's just to create that small room where people can really connect and really kind of be there for each other. I really think it's worth it. A lot of people don't see the value. Like I could just take money. I could take the money. I'd go to one of these things and just invest it in a deal. And it's like, well, you could, but you'll miss out on the growth, right? You'll miss out on being in the room. And you said you're in several groups and I'm in several groups as well. And I run one. So I think it's incredibly valuable. And if that's true, you're the same person, except for, the books you read and the people you meet. Another great quote that I like is you're the average of the 5 people you spend the most time with. So if you want to grow your wealth, you've got to be in a room where people are worth 10x or 100x more than you. And their afterthoughts that they share after saying something, you're like, "Oh my gosh, that's amazing. I need to do that." So you're going to learn so much. So yeah, I think that's what I would say about that.
Yeah, 100%. I think that also follow through and follow up are huge.
Yeah.
If you meet somebody, especially someone who's further down the road that you want to be on, and you do happen to get some time with them and they give you a piece of advice or maybe an action item. I know a lot of people that I've encountered, they'll tell me like a book to read, or they'll tell me something, a nugget that was very impactful and powerful for them. And if I have any possible way to contact them, which usually in this day and age, you can look people up, you can Instagram, DM them, maybe they give you their email, whatever it is. If you're the person who actually reaches out to them after the conference, after the event, whether it's a couple of days later or a week later, and you actually respond to the advice or whatever action they gave you and say, "Hey, I read that book. I thought it was really poignant what they said. It reminds me of something you told me at the conference. Just wanted to let you know." And don't even ask anything. Just share that you did something with that information.
Yeah.
I've found that to be a great way to stand out versus the 100 other people that shook their hand, had nothing really valuable to say to them,
Yeah.
and then didn't act on what that person told them. I don't know if you feel the same way.
Yeah, no, and I think too, like it's interesting about networking. And again, there's kind of 2 people we're talking. One, there's the passive crowd. This is more for kind of the active crowd or somebody who's looking to kind of really grow. But one of the ways I've really grown my network and really helped to get around amazing people is I've just really tried to put myself in their shoes and think about what does this person really need? If I'm with somebody who manages, I know a couple people that have over 2 or 3 billion in real estate, or what can I offer to them, right? Well, maybe could I raise money? Could I promote something they're working on? Could I have them on my podcast, the Mailbox Money Show? What could I do that would be valuable to them? And if I can just simply show up in a way that's like, well, how can I give to this person? All these people that are super valuable people, they're people coming asking for stuff all the time. So if you can show up and instead of like, gimme, you're like, "Hey, how can I give to you?" And you give something. And maybe it's even a physical gift. You show up with a gift and say, "Hey, I've got this for you." And so I try to really be generous and just, try to find ways to give to people that are way more successful. And it doesn't always open up doors, but a lot of times it does. It really does open up. People just feel this subconscious thing. They feel like they have to pay it back. So, and it also, I think it's just a great vibe, just a great way to show up that you're not somebody who's just taking, you're somebody who's giving. And business is all about who do you like working with? If somebody's giving gifts or they're introducing people or they're promoting someone's stuff like that, that makes you very likable as a person, right? So it's a great way to open up doors with people that are much more successful than you.
Yeah. And last question on this topic. What would you say to someone who's new, who feels like they don't have anything to offer to other people, but they're trying to find ways to add value?
Yeah, I got a friend like this. He's just got a heart of gold, just an amazing guy, and just love the guy to death. But he doesn't really see his own worth, right? He just sees what do I have to offer someone? And I think that a lot of times you don't always know. You don't always know what you have to offer, but I think it's important to at least think about. One example of this, I went on this cruise. It was like a $6,000 cruise for a week. It was a real estate cruise, and a lot of successful people there. Rich Dad, Poor Dad, the guy who wrote that, Robert Kiyosaki, was on the cruise, and but there's a guy who was very successful multifamily, and this was when I had only raised $100,000 for a deal. And I was thinking what can I do? There's this quote, make yourself valuable to valuable people. So I was like, what can I do to this person? How can I help them? Is there any way I can help them? So then I approached him and I said, hey man, I was thinking about you. This is like the second to last day of the cruise. I said, thinking about you. And I was wondering if we could get together for a few minutes to talk about your business. I think there may be some ways we could collaborate or I could help you. And he kind of blew me off. But then later he came said, okay, let's meet up by the martini bar at this time. So we did that. And then I said, well, hey, how's it going? And he was somebody who would teach people how to raise capital. But I was like, well, how's it going for you raising capital? The people that they teach is they don't have time to kind of be doing all that. And it turns out they were having some challenges. I didn't know that, but I said, how's it going there? And he said, well, this is what's going on. And I said, well, what if me or someone else I knew were come on alongside and help you do this? And he was like, oh, that'd be amazing. And so that was really what got me from raising $100,000 to raising $15 million together. So a lot of times we don't know. And but that would not have happened had I not been curious and asking questions and really just trying to help. I had my own thing I was trying to create at the time. It wasn't really going as well as I wanted, but I was kind of sad when I left it. But I was like, well, this is a great opportunity. Let me pursue this and see where this goes. And sure enough, it opened up a lot of doors. So I think that for a lot of us, we want a really clear path or what is it? Tell me you A, B, C, and D. Well, it's like, well, you've got to be in the room is number one. You got to be curious and ask questions. And you've got to make a connection with that person in their business that they see value from. Right? Because they're thinking about their business all the time, but people don't approach successful people. They're like, hey, how can I sell? It's rare. It's really rare. So and if you just approach, hey, how can I help? That's not a good question. You want to be thinking through what do they actually do? What are the ways? What are the things that could be there? If you don't know, ask more questions, try to learn. But once you kind of have an idea, just be willing to ask, well, what about this? If, are you needing help on this? Or if you grew this, what would happen? And that would open up a lot of doors, I think, for a lot of people. And I think a lot of people, especially younger people, just don't realize that that's a way you get ahead is you just go in and be very curious and then offer to help in an area that somebody already needs.
Yeah, I love that story. One of my mentors named Brian Lubin, I'm in his mastermind called Action Academy.
Amazing. Yeah, I love Brian. He's been on my show. Yeah.
Oh, awesome. Yeah, he talks about, when you're trying to meet and get into the circle and rooms with potential mentors and people ahead of you, you either pay to play or seek to serve. He always says that. And the pay to play is just, some people scoff at that because they think, well, why do I have to pay for access to certain individuals or certain conferences or meetings? But I mean, that's just part of the game. And the other thing that I really believe is that if you have paid to be somewhere, you are much more likely to actually put in the effort to get, value out of it and also bring value. So that's one other thing. So the seek to serve is the story you just told, right? Where you get very strategic and thoughtful about how you might approach somebody and add value beyond just, hey, how can I help? But that pay to play element is not one to gloss over either, where you can join a paid mastermind group or you can go to a conference. You can go to I want to hear about this real estate cruise and how I could go to that.
Yeah.
But you go to something like that and you put $6,000 of your own money in, you're going to find a way to get value out of it.
Yeah, absolutely. It is. It's amazing too. Like that real estate cruise, it was $6,000. Now it's more expensive, but if they had charged $1,500 for a week, they would have had probably 2,000 people there, right? But because they charged more money, it limits who's going to be there. Who's going to be there? Very qualified people, either people that are very wealthy, where it's not a big deal spending 6-7 grand, or it's people that are just really serious. Like to me, am I making 200K? That was still a fair amount of my take home money at the end of the year. I was like, that's a lot of money, but I was like, I'm going to make it worth it. Right. And so it's the same with my group called the Wealth Forum. It's high ticket. People show up, they're in the room. We do once a quarter. We do a 1-day live event. And it's like, we really see a lot of value there. People make connections, they do deals together. And so, again, when people, like when you narrow the room of who's there, and this is going to contradict what I said earlier, but if you just go to local meetups only, you'll find a lot of tire kickers. But if you go to higher ticket things, then you'll find people that are really serious. Go to a conference that's, anybody who goes to a conference, like they have, for example, this Limitless conference will be in Dallas. It's $1,000 to $2,000 to go for the ticket, and plus your travel, plus your hotel. So everybody there is like really serious or really wealthy or both, right? They're there at the event. They're taking their time to do it. And so you're just going to find a different caliber of person. So when you're there, and I always say when you go to events, try to have some sort of goal in mind. If you can get the list ahead of time, who's going to be there? If not, who's the person you're trying to meet? What are your specific goals in your business? So that when you share, you can show up and say, hey, I help people find passive cash flow in deals like this. Or I'm looking for a partner that buys businesses. Or whatever the thing, you want to try to like introduce yourself in a certain way so that people can go, oh, I just met a guy who buys businesses over there. So when you're talking to people, you're very clear. And it's okay to show up and, hey, I'm just here to learn, and that's great. But the clearer you can get on that, the easier it is for people to want to work with you or to introduce you.
Yeah, agreed. And it's interesting. You were talking about the free local meetup versus the paid events and all that. I kind of view the free local meetup, which I run one in Houston, by the way, and I have a lot of fun with it. It's a free thing. It's educational. There's networking, but the stakes are low, and that's intentional. It's meant to provide kind of that mastermind-like environment at no cost. But to the point of what we're both just saying, because there's no buy-in, people don't take it as seriously. But I view those meetups as an opportunity to practice and refine that 30-second pitch. We do intros at the beginning of every one. There's networking breakouts where you go meet people, and you do it rather quickly by design. That's practice, right? If you flub it or you don't say something the right way, you're not on a microphone in front of 500 people. You're in a small group or maybe just talking to one other individual. And we coach and give each other feedback on how we can be more clear about our goals or how we can, advance. And I do think there is a place for all of those different types of events in that ladder of personal development and networking. And I think it's cool kind of hearing you talk about some of these higher ticket items too.
Yeah, it is. It sounds kind of weird. Like I love what, Brian Lewin's super sharp, and you either pay to play or you seek to serve. I think those are great ways to think about it. And I think both are very powerful, and I do both. And it's just like, should you be a passive investor or should you raise capital or find deals? Like, well, maybe you should do both. I think you got to figure out really what fits for you, what your goals are, and then move towards that.
Yeah. And over time too, it naturally helps you level up and feel, I think you talked about, and I want to circle back to the Rich Brain book now, but what was it? Wealth Worthiness? Was that the topic? Yes.
Yeah. Wealth Worthiness. Yeah.
So that seems to come over time and experience, that most people probably aren't inherently wired to believe that they deserve any financial success that they find, unless they maybe come from extremely, wealthy inheritance. But can you talk more about that concept and then how it kind of relates to everything else that you do?
Yeah. So it's interesting, the narrative around wealth is that, people in our culture and our media, it's that people either have money or they don't. There's the haves and the have-nots, and you either have the silver spoon in your mouth and you go trust fund, baby, or you just don't have it. And you don't have it, you're never going to have it. But reality is Fidelity Investments did a study in 2019, and they found that 86% of millionaires are self-made. So that means that almost 9 out of 10 did not inherit their wealth, right? They learned how to do it. These are learnable, teachable mindset and habits that people can do, which should be incredibly encouraging. Anybody listening who didn't come from wealth. I came from very middle class, my dad was a single dad and had 4 kids, right? There was a lot of stuff I worked through paper routes, bought my own first car. And so there's things these are learnable things. So I think that when it comes to wealth worthiness and it comes to how do you develop a wealth mindset, one of the practices that people do that I've seen is, again, how people show up in a room. Most people have self-sabotaging habits and beliefs. So about 90% either have procrastination, they have negative self-talk, other things like that. So it works not just in wealth. When it comes to growing wealth and our worthiness, it works in relationships. So if I show up at a party and I'm a single guy and I see a beautiful woman and I go over to talk to her, but on the way over, my self-talk is, oh, you're not good looking. She's never going to like you. and what do I have to offer, right? How's that conversation going to go, right? It's probably not even going to happen. If it does, it's not going to go well, right? Because I've already kind of self-sabotaged. I already have that negative self-belief. And so there's a way to change that, and it's to change the way that we actually show up. And this exists in business deals as well. I'll give an example of this. I've been doing a lot of work around mindset the last few years, and I had a business deal come by, through me just about a year ago, a little less than a year ago. And it was way bigger than what we normally would do. And I passed on. I was like, oh no, it's no good. But then I was able to think about it and like, I think that really could be amazing. It would about 5x our business overnight as far as cash flow, as far as the size, everything. And so I said, well, okay, well, let's go for it. But I think I was able to see it because I was doing this mindset work, and I was expanding, becoming this 10x type person that when it came around, I was like, oh, that's it. Now, fast forward 7 months later, we got through an e-commerce company that ships products out of China. So with all this stuff happening, we didn't end up closing on it, at least not at this point. But I don't look at it like a failure. I look at it like a success because I was able to receive that, right? We raised $2.5 million for it. We were ready to go. The lender ended up dropping out because of the tariffs and whatever, even though sometimes things don't work out the way you want, but you learn and you grow. And now just last Friday, so today's Tuesday, last Friday, we went under letter of intent for another business, right? That's a little bit smaller, but it's a phenomenal business. We're getting an amazing deal on it. And so again, it's just amazing what happens when you allow yourself to see yourself, not just who you are, but the 10x version of yourself. And you step into that. So again, people think this is weird, but if the type of weird is people that are worth tens of millions of dollars, then maybe we should all become a little weirder to do that. We should follow what they're doing and not just what the crowd does.
It's fascinating that you talk about an example that is so relatable to people, which is just basically feeling not worthy in a normal social situation. But what you're saying is that in talking to all these other people who have a lot of success, they have dealt with and figured out how to combat that in their own lives, in business, in life, et cetera. And that's one of the more common traits, right? Is the ability to assign yourself at least enough worthiness to feel like you belong in an opportunity. And so it's interesting that is not just something that beginners deal with. It sounds like it's something that people deal with at every level of life and business.
Yeah, almost every successful person I know has imposter syndrome at some level, which is just like, who am I to be successful and show up in this room full of amazing people? And most people, unless you're a total narcissist, like everybody's had that, because you show up in a room full of peers and it's like, if you're not, in a room where people are amazing, then if you're in a room with amazing people, you're going to feel that. And so it's okay to show up and be curious and be open and realize, hey, there's something here, and it's good that I'm in a room where people are way ahead of where I'm at, and that's okay. And so I think it's just being willing to put ourselves in a place where we feel a little bit uncomfortable and realize, like, I have my unique gifts, somebody else has their unique gifts, and I'm growing, I'm in process, and it's good. So I think that's a very normal thing.
Yeah, absolutely. So you mentioned that you invest not only in real estate, but you now look at different types of private equity, oil and gas, small businesses. When you have an investor who comes in with this kind of preconceived notion that real estate has all the benefits that we always hear people talk about, but then you also want to maybe present an opportunity like the business that you're about to go into contract with, like how do you educate people and get them to kind of consider different asset classes? Is it mostly around their goals, or is there some other dimension to that?
Yeah, well, it's interesting as an investor. A lot of people, I call them, we're like a one-trick pony, right? I do single family, I do multifamily, I do self-storage, I do whatever. And it's like, we just think, well, that's what I do. Well, in my opinion, there are times where it's a great time to be a multifamily investor, or to be a self-storage investor, or to invest in precious metals or oil and gas or other things. So as an investor, I think you should look at yourself that I'm an investor. I can invest in anything that makes sense to me, right? In my book, I talk a bit about this. How do you analyze assets of different classes that you're not really normally used to, like you haven't invested in before? How do you get comfortable with that? And so I think really it comes down to three things, like when it comes to your goals. Like, what are your goals? I think cash flow is number one, because I know a guy that's worth over $500 million. He loves cash flow, right? Because he can just live off the profits of his money he has. It's very safe. It's a very easy kind of way to do it. He doesn't invest in debts. He provides loans to businesses and things like that. I know people, and even people that are trying to quit their job, the cash flow will help them to be able to do that. And then you have long-term appreciation, which means, hey, I want to make a lot of money someday, or I've got a couple deals right now that if they hit they're a 10x plus, 10x, 100x type return. There's a chance it goes to zero because it's a much higher potential return, but Those are different types of deals. Or it's like, hey, we're expecting a 2x in 5 years with most of the money on the back end, right? So that's a different type of deal. Then you've got the tax benefits. So I think it's trying to figure out what really your goals are. And so to me right now, I think the thing that lacks in real estate from new deals specifically are cash flow. So anybody who wants cash flow, there's only a few things. I just wrote a report on this. I'm happy to share it with your audience too for free if you guys like. But a few things. One is buying private businesses. So if you look at real estate, multifamily real estate typically has a cap rate of 4, 5, 6, which kind of means, for those that aren't familiar, it's like if you paid cash for something, what would the returns be per year in cash? So if you're getting 4%, 5%, 6%, something like that, that's a pretty decent deal. Well, some of these private businesses, they're selling for 3 times profit, which ends up being like a 30 to 35 cap rate, right? So the cash flow is just crazy higher, 5, 6, 7, 8, 10 times more. So those are great deals, right? Because they just bring so much cash back. There's risks, there's things involved. You got to understand those. And then, so we love that. We love oil and gas because those cash flow very quickly, oil and gas drilling, or we also do one where we own land where there's oil and gas drilling on. It's much more stable, provides cash flow, and there's some upside there as well. And then we like real estate debt funds. So instead of being on the equity side where we're buying the property, we'd rather own the debt and be the bank, right? We'd rather say for low loan to values of 50%. So somebody brings $2 million at closing, we bring the other $2 million, and then they buy some small commercial building. And then if they don't pay, we take over, and it's diversified across a pool of other first position notes. So those are a few things that we love when it comes to cash flow, but I'm just such a big cash flow guy because I think that that's really what allows investments to be safer. You get your money back sooner, which means it lowers your basis as your money's coming back over time. And also it provides the ability to live off of the cash flow.
Yeah, no, that's fascinating because there's so many different ways to get it. And as you said, it's hard to be an expert in multiple things, but it sounds like from what, this conversation and just what you specialize in general, you think about things through some general lenses, like you said, the market for the opportunity, the operator itself, themselves, and the deal itself. And then from there, you educate yourself, you apply some of the frameworks you have around money, people's goals, their experience, and then you can kind of drill down and figure out if it's the right type of opportunity for you and your investors. So I imagine a lot of what you do is educate people on how to think just like that, which I imagine is part of why you wrote your books. And I saw as well that you put out a lot of content, educational content. So I guess, kind of rolling through the final stage here, what is the best way for people to find you and learn more about what you do and get in touch if they want to?
Yeah, thanks. I appreciate you having me today. So a few weeks ago, I created this that includes my 3 favorite cash flowing investments today, and it's called the Mailbox Money Blueprint. So if you want to get that for free, you can text the word cash flow, just all one word, cash flow, to the number 33777. So if you text the word cash flow, one word, to 33777, we'll send that to you. We'll ask for your email, and you can hear about our future offerings and things like that. But it just gets into why I think cash flow is important and what are some of the current opportunities mid-2025 that could be really beneficial for you.
I love that. And you also have a great podcast, the Mailbox Money Podcast. So we'll make sure to include the information you just shared and then links to where people can find you. But I really enjoyed having you on. I hope we can do it again sometime. And yeah, thanks again.
Thanks so much. Appreciate it. It was great being here, brother.
Thank you for making it to the end of today's episode. As you may know, podcasts are very difficult to grow organically. If you're getting value from today's episode, I'd deeply appreciate if you can take 30 seconds to leave my show a 5-star rating and review. This will go a long way to helping me reach more listeners just like you. Thank you so much in advance.